All right, let's dive into something a little bit different today.
It sounds good.
We're going to be taking a look at the NWL Impact 10 Fixed Indexed Annuity
Yeah.
from National Western Life Insurance Company.
Oh.
And as always, we're going to try to break this down,
Right.
make it understandable, so you can figure out if it's something that you might want to consider
Sure.
for your retirement planning.
Yeah, absolutely.
We've got a bunch of information here on how it works,
Okay.
how it can potentially grow,
Right.
different ways you can actually access the money,
Uh-huh.
and what happens to it when you pass away.
Okay. Sounds good.
So let's jump right in.
All right.
This annuity has a pretty interesting feature right off the bat.
Okay.
A 7% premium bonus in the first year?
That's right.
That's pretty significant.
Yeah, it's a big number.
But I imagine there's got to be some sort of catch or
Well,
string attached to that.
it's not all accessible immediately.
Right.
It's tied to a 10-year vesting schedule.
Okay.
So you gradually gain access to it over those 10 years,
Right.
reaching 100% at the end.
Gotcha.
So that initial boost really encourages you to hold on to it.
It makes sense, yeah.
For the long term.
But what happens if something happens before that 10 years is up?
That's a good question. And that's what's interesting is that
Okay.
the full 7% is actually available immediately for
Okay.
the death benefit.
Okay.
So that offers immediate added security for your beneficiaries.
I see. So it's like a little bit of immediate protection there, too.
Exactly.
So now let's talk about the different ways
Sure.
this annuity can actually grow your money.
Yeah.
What are the options when it comes to interest?
Well, you've got a few choices.
Sure.
There's the fixed interest strategy,
Right?
a predictable return.
Simple?
Yeah. Then you've got a monthly average strategy
Okay.
and a point-to-point option.
All right.
And this one is linked to the S&P 500 Low Volatility Daily Risk Control 5% Excess Return Index.
Well, that's a mouthful.
It is a mouthful.
But basically, it sounds like it's
Yeah.
tied to the stock market,
It is.
but maybe a less volatile part of the market.
Exactly. Yeah. So it's designed to be, less prone to those
Right.
big swings, so it could offer
Exactly.
a little bit more stable growth.
So it's like a balance between stability
Yeah.
and potential growth.
Right.
So you've got your fixed option,
Yeah.
and then you've got a couple of options that are tied to the market, but with a little bit
A little less risk.
less risk involved.
Yeah.
Now, what about guarantees? Are there any guarantees when it comes to...
Yeah, so the participation and asset fee rates
Okay.
for those indexed options
All right.
are guaranteed for the first year,
Okay.
but they can change after that.
Right.
But importantly, there's also a minimum guaranteed interest rate somewhere between 1% and 3%,
Okay.
providing a little bit of a safety net.
So you're never going to earn less than 1%,
Yeah.
but you could earn more depending
Exactly.
on how things perform.
That's right.
That makes sense. Now, let's say you need to actually access your money.
Right.
What are your options there?
Well, after the first year, you can withdraw up
Okay.
to 10% of the account value
Okay.
annually without penalty.
Okay.
And that includes any vested bonus.
Okay. That's good to know.
Yeah, and there are also waivers for withdrawal charges.
Okay.
If you need the money for required minimum distributions
Right.
due to terminal illness or a qualifying medical stay.
So some exceptions there
Yeah.
for those tougher times.
Exactly.
Now, one thing that I found interesting about this particular annuity is that it also has a policy loan feature,
It does.
which isn't something you see with every annuity.
No, not all of them have that.
So how does that work?
So in most states, after just 2 months,
Okay.
you can borrow up to 60% of the contract value
Okay.
at a fixed interest rate of 7.4%.
All right. So it's not free money.
No, it's not sure money.
There is interest involved.
Right.
Anything else to keep in mind with that?
Yeah, and you've got to remember that this loan needs to be repaid
Okay.
before you can change your interest crediting strategies.
Gotcha.
So it offers flexibility,
Right.
but you've got to consider those interest costs.
So it's like a way to access the money if
Yeah.
you need it,
Uh-huh.
but it's not without,
Right.
it's not without some strings attached.
Exactly.
Now, for a lot of people, the key with these annuities
Yeah.
is turning them into retirement income.
Yeah.
How does this annuity handle that?
So this one can be converted into a guaranteed income stream
Okay.
through various options
Right,
like
yeah.
lifetime payments,
All right.
joint lifetime payments,
Right.
payments for a set period, or with a refund feature.
So some choices there.
Yeah, you've got options.
When it comes to how you actually want to receive that income,
Absolutely.
are there any other ways to get income from this?
Yeah, so you can also choose optional riders
Okay.
at the start.
Okay.
That can provide a guaranteed lifetime income stream
Okay.
without fully annuitizing the contract.
So that adds some flexibility.
Yeah, exactly.
Now, what happens if the policyholder passes away?
Okay.
What about the death benefit?
So the beneficiaries received the full account value,
Okay.
including the bonus.
Gotcha.
They can take it as a lump sum
All right.
or explore other settlement options.
Okay.
And if the beneficiary is a spouse,
Okay.
they have the option to continue the contract,
Right.
maintaining its tax-deferred status and other benefits.
So that spousal continuation could be pretty valuable.
It can be, yeah.
Now, finally, who is the company behind this annuity?
So that's National Western Life Insurance Company.
Okay.
They've been around since 1956.
All right, so they've got some history.
Yeah, they've got a long-standing history in the insurance industry.
So there you have it.
There it is.
We've covered a lot of ground here.
We have.
They talked about that 7% premium bonus
Yeah,
with its vesting schedule.
that's right.
We talked about the different interest growth options.
Uh-huh.
We talked about ways to access your money, like the 10% free withdrawal,
Yeah,
the policy loan,
right.
how it can generate retirement income,
Yeah,
and what happens to it when you pass away.
that death benefit is important.
Now, the big question is,
Yeah,
how does this all fit into your specific situation?
that's the key.
You know, everybody's situation is a little bit different.
Absolutely.
So think about things like that bonus that vests over 10 years.
Yeah,
Does that align with your long-term goals?
right.
You know, when could the flexibility of that policy loan
Uh-huh.
be beneficial versus,
Right.
the potential impact on your growth?
Yeah.
These are the nuances you've really got to consider
Absolutely.
when you're exploring these different options.
I agree.
So as always, thanks for diving deep with us.
Thanks for having me.
Now we'll catch you in the next one.